Hello everybody, this will be a basic how-to how to use divergences and kind of how to identify them. If you guys liking this video, please give me a thumbs up and subscribe. Anyways, to start off, a divergence is basically a divergence in price and in the indicator that you use. For example here, this is price, our blue example on here, and it happens when price is either making a lower low or a lower high, while our momentum indicator is kind of doing the opposite thing in when it comes to price. Now there are different types of divergences. We'll get into those later on in the video, but mainly what I want to look at is identifying divergences with our oscillator. In this case, I am using Market Cipher B. I'll leave a link in the description and how to get that. But on this case, I turned off everything else except for the momentum waves and the dots. I kind of use the dots to help identify a divergence in this case. In this case, we are also on the 12-minute timeline. And so let me turn off our magnet tool real quick. I'm going to be using a trend line and simply looking for places where our price and our indicator are kind of doing opposite things in a way. And so here you can see price is making lower lows as indicated by the green trend line right here, while our oscillator, in this case Market Cipher B, is making higher low or lower higher lows, and so they're diverging from the two. And so this is what basically a divergence is, and in this case this is called a bullish divergence. And so let's do more examples here. Again, right here we have price making lower lows as our momentum is coming up, and it's making higher lows, and therefore it means that there's an imbalance in price and price has to change. Now, usually price does go in the direction that you want it to. In this case, for bullish divergences, you want to go long or hoping the price will go up, in which it kind of does. But for simplicity's sake, I'm only going to be showing you divergences. And so another good case is a bearish divergence, and a bearish divergence is right here, where price is making higher highs, where our momentum indicator is making lower lows, or lower highs, I mean. And so a good one is kind of right here, where we have price making higher highs as our momentum is coming down. You can argue that this can be a more of a another bearish divergence, as we have sort of a price in momentum kind of diverging from each other in multiple scenarios here. And so that is a example of a bearish divergence. And with this, price, as you can see, went down after seeing this divergence with price. So now that we covered the basic divergences, which are bullish and bearish divergences, let's get into the more advanced. And these require a little bit more attention to detail, I'd say. But anyways, what they are called is hidden divergences. And so, like with regular divergences, there's both bullish and bearish. And essentially, what you are looking at in hidden divergences is, with a bullish one, is that you're looking for price making higher lows, and our momentum is making lower lows in a bullish case. And so right here we have momentum making lower lows with price making higher lows. And so this is called a hidden bullish divergence. And as you can see, price went up. And so another example, now these aren't as common as regular divergences, but they do occur, and they are kind of more advanced and tricky to spot, and it kind of takes you a little bit to figure out what they look like and how to really catch them. Next up, let's move on to a hidden bearish divergence. And so what we are looking for here is when price is making lower lows and our momentum is making higher highs, whereas like our momentum is kind of getting exhausted in a way, and it's losing momentum. And so a slight hidden bearish divergence was right here, where we had our momentum making higher highs as price was making lower lows. And so with this, price did come down. And so if you guys actually want to trade just divergences, I highly recommend using the 1 hour time frame, as divergences can be worthwhile to trade, and there seems to be more volatility and respect for divergences on the 1 hour time frame, just from my opinion and from my own trading experience. Now, to sum it all up, what a divergences is difference in price and the indicator. Like, they're showing opposite things. And with this, you can have bullish divergences where price is making lower lows as price is making lower lows as our momentum is making higher highs, and bearish divergences where price is making higher highs as our momentum is making lower highs. I hope you guys liked this video and it was of use to you. Again, please like and subscribe. Along with, I'll leave a link to a free Discord where I post all my trades and along with other content too. Thanks. Bye.